I don't know if we're quite ready as society for AI to manage your money for you. It's not about complete replacement, but it's enhancing everything that we do right now. There's a level of personalization that I think comes from AI where you can basically just like have these experts in your pocket, focused on your specific problem. I think that's where the most value is going to come, to the individual. I think truly the startup dies once you give up on it. The difference between where we're at right now and 1 million users is probably just 1,000 small tweaks. Great businesses are bought, not sold. No one else is solving it. We have this unique edge. We hired the right team. That's when a big partner of ours, tapped us on the shoulder and said, like, hey, here's an offer. If you try to build a company with the goal of selling it, if you try to sell a business where some larger business or fund says, we have to have that, let's go and acquire that company.
So I guess, thanks for coming on, Alex. You've built AI drones for Mars and now for Main Street portfolios. What's the through line in your journey from aerospace to personal finance?
Yeah, in some ways it feels like a crazy transition, right? To me, I think it's all just like part of the same continuation. It's complex systems modeling. It's trying to find crazy problems that exist in the world, solve them using AI, and bring them to the masses. I think ultimately there's a significant amount of inefficiency and initially dull, dirty, dangerous jobs with robotics, drones, and then if we're thinking about financial advice and ultimately ending up in retirement with more money than you otherwise would, I think there's a significant amount of inefficiency in that part of the system. Feels like there's actors that actively obfuscate some of the good advice out there. And so if we can help individuals optimize their finances, get a little bit better, then we're on the right track.
Was there a moment when you realized that the complexity of finance could be solved the way that you once approached autonomy in aviation?
I think there's almost like a third step in the middle of there as well, where my wife runs this hybrid AI tech company as well. And they've used large scale complex systems modeling to be able to solve drug development. And so she has a PhD in cancer research, oncology, and she's done microbiology research, and they've built a digital twin of the human body for drug development. And so in my mind, the three companies are very similar. Whether it's autonomous vehicles, at the end of the day, it's not just one big black box AI model. It's a mix between world models, physical 3D mapping of the environment, object tracking together with deep learning and, modern computer vision systems. Basically, after I sold my previous company, Iris Automation, in 2021, suddenly had a lot of nothing to do. We bought a house and we had kids. We have a 4-year-old and a 2-year-old now, 2 super cute boys. I started building, a bunch of different companies on the back of a napkin and prototyping things, and took on my coding gloves for the first time in a little while. And also just started talking to financial advisors, not really because I thought I would build a business in that area, but I couldn't get over the fact that a lot of financial advisors I was speaking to were more salespeople than experts. And I thought maybe there's something here, and sort of honestly just sort of dug in one layer and another layer. And as I, pulled back the curtain, it was clear that, to be able to, it kind of feels like there's, 10,000 opportunities and everyone's overwhelmed about, what exactly you should invest in. There's probably 1,000, tax optimization strategies that you could be using, but only 6 of them at any one point apply to you and your personal situation. Estate planning, wills, insurance, thinking about 401ks and 529s and IRAs and Roth conversions and crypto and macro and international exposures and asset allocation and fees and taxes. I mean, there's
all these
so
moving
much
targets
that very quickly it becomes, as difficult as autonomous vehicles and self-driving cars and self-flying drones. And I mean, the chance that you have, one individual human solving that problem, you know, feels unlikely that they will be able to get to all of the optimization opportunities. And so I think kind of like with robotics, it's not about complete replacement, but it's enhancing everything that we do right now. And so the idea that, I don't know if I don't know if we're quite ready as society for AI to manage your money for you. That will take a couple more years, but the idea that you could connect your account, input it, answer a couple questions, and then have AI find a bunch of optimization opportunities for you, I think we're ready for that. That feels, I think, obvious to tens of millions at this point, if not more.
So I wonder, I'm putting my super skeptical hat on, that all of the things you mentioned, so from insurance to mortgages to loans to all sorts, you could argue that the system benefits from the individual not knowing what to do. That if normal people don't know where to invest, what that means, what a 401k is, how does that work? The system benefits. So it's disruptive, I think, more than just in an individual's life might be easier, but the system as a whole in multiple areas is likely going to need to change or adapt to that. What do you think about that?
I think at the end of the day, a lot of what we do is just psychology, right? A lot of it is just controlling fear and greed. It's education. It's helping people feel more confident about their situation. I think this is one of the big problems that exists in there's a lot of trading tools, right? And they feel like they come in, they expect a certain level of expertise and technical analysis or Bloomberg Light for the retail investor or AI signal generators. And so we've specifically said, we're not going to target traders. We're going to target, people that probably don't even identify as investors, right? They have a certain amount of money. They're not super rich, but they have enough money in a couple different accounts. Maybe they have a house and some retirement accounts and, an emergency fund, and, they're doing education savings. And they assume, kind of like with taxes, right? There's probably something better than what I could be doing. I don't really want to pay attention to it. And so the idea that it's sort of searching and reacting to markets, and the fact that we can get very personalized, and the fact that it's all completely automated, means that we can meet you at whatever level of expertise you're currently operating with. It could be as simple as, Becky, it's June, here's 3 optimization opportunities for the month. And that's it. Don't pay attention to anything else. It's just doing those 3 things will help you get a little bit better. It'll improve your score a little bit, this month. David might want to dive into I really want to squeeze every part of this out. Let me dive into the tax loss harvesting opportunities, and markets are a little bit volatile. And so let me, click in, and see okay, there's 6 different opportunities here. There's 6, you can go and look at the cost bases and look at replacement funds, and, can I make this little tweak here, to save me $1,000 by swapping these 2 funds here. So it's really up to you. The fact that it's, personalized means that we can get you wherever whatever level of expertise you have, whatever level of sophistication. I actually think that, one of the biggest problem, or not, I don't know, it's not really a problem. I feel like it's a missed opportunity. And in the way that people talk about AI, I think most people are talking about super intelligence and, worst case scenarios, or using AI to solve, I don't know, cancer, or, the microbots, or massive, data augmentation. But there's a level of personalization that I think comes from AI, where you can basically just have these experts in your pocket, focused on your specific problem. I think that's where the most value is going to come, to the individual and to the masses.
Mm-hmm. And again, I think we'll have a knock-on effect for probably the better to how the system as a whole works. Because things like financial advisors,
Even
you
if it like
mentioned.
creates a little bit of pressure on the financial
Mm,
advisors to raise the bar for them, to
yeah.
be a little bit more transparent, to
Hmm.
lower their fees, mission accomplished.
Yeah.
Obviously, I think we're going to be $1 billion company and beyond, and this is like really, really going to be something. But we've considered just marketing the product as a second opinion. You go to a doctor and it's very reasonable to get a second opinion from another doctor. It's really important. It's my body. It's, something, whatever it is. Why would you not get a second opinion on your financial plan, on where you're invested? And so the idea that, you could get the second opinion on your financial advisor, come into that financial advisor conversation, armed and, having sort of more questions, sort of making sure that you can justify the fees that are being charged, push back on some of the things that sound too technical and fancy, and David, don't worry about this, I'm the expert, leave it in my hands. If people can push back on that sort of conversation, I would be very happy. I think that gets to the sort of like underlying inefficiency in the system, and helps people put a little bit more money back in their own pocket.
Have you considered also marketing or like bringing this to financial advisors themselves as an assist?
We have some financial advisors that use the platform itself as well. Obviously, I make generalizations, and I don't want to paint every financial advisor as as terrible. There's a wide swath of people there. I think a lot of the financial advisors I speak to, ultimately want to help their clients feel more confident as well. I think that financial advisors are sort of like broadening their focus as well. And so it used to be, I think, that you had financial advisors like mostly just providing investment advice. And now they're thinking a lot more about tax optimization and long-term scenario modeling and estate planning. And so the more I think they cover, I think ultimately financial advisors, on average are looking at 50 to 100 clients, right? And they're, what they're managing at the moment. And so if they're widening the aperture on the services they offer, and, if this kind of technology allows them to manage 200 clients, 300 clients at the same time, very open to that. I think that, financial advisors in general are like a little bit conservative though. So, for a lot of them, the system works. They have relatively high fees that they're able to charge. Very few people leave their financial advisor. The churn is extremely low. You don't really notice the fees that are getting taken out, right? And so the idea, like the fact that they manage the money and they take the 1% fee or whatever it is, and it's sort of just hidden in the fact that your portfolio went up 5% this year because the stock market went up 5%, or it's easy to say like, oh, the market is down 18% this year, and that's why your portfolio is down 20%, right? It's just like that's the way it works. And so it's easy to claim credit for the gains and blame the market on the losses. And so there's not that much pressure at the moment, I think, for the financial advisors to change. And so I think realistically, we can go directly to consumers. We already have 30,000 users on the platform. That grows. And then I think there's sort of a natural pressure for the financial advisors to say like, okay, we don't want to get left behind. Now let's start adopting some of these tools. Let's start personalizing the portfolios. Let's start offering more services. Let's lower the fees on the individual by, managing 200 or 300 clients at the same time. I think that's coming. And very happy to adapt our business as well to that change. I would be very happy if there's more competition in this place, right? That's a net positive for the consumer. And personally, with our system being completely automated, we can scale up very easily, and there's high margins. And so there's plenty of room for some competition there.
Sounds like it. Yeah, that makes sense. When you brought up a second opinion, I thought of back in the WebMD days, there was some pushback or frustration expressed by doctors that all of a sudden these people that didn't go to medical school were second guessing their prognosis or their diagnosis or whatever. And but if you look at it in a different perspective, you might have different incentives, because if you are fielding 50 or 100 clients in a day, or patients, if you will, that maybe you're not as focused as someone who has to live with that sore knee every single second of every single day, or whatever the case is.
Exactly.
And then over time, WebMD is still around, and there are other things as well. And now you're seeing doctors say it's actually irresponsible, in their opinion, for doctors not to use AI. And so I thought of that regarding finance. And do you think that something similar could be said, if not now, soon, where it might be actually irresponsible of a finance advisor not to be using all the tools, the best tools available?
I think very much so. Yes. I think that as a financial advisor, we're regulated by the SEC. As a registered investment advisor, even our system, has a fiduciary responsibility to give the best possible advice to clients. And if there's something better you can be doing as a financial advisor, even as a human financial advisor, if there's tools available that let you scan more, react to markets, find optimization opportunities, whatever it is, I think it's very reasonable to say that, would be irresponsible for them to not use these tools.
You've worked in fields that outpace regulation before, such as autonomous drones and now AI and finance. How do you innovate without overstepping compliance?
I think a big part of it is working with the regulator. And so, I don't think it serves us that well to, go international or, really push the boundary and go outside of the scope. With Iris Automation, with this autonomous vehicle company, we spent 7 years just flying to Washington and doing demonstrations with regulators and like sitting on standardization committees and providing white papers and testing results and sort of very openly trying to share. And so as much as possible, we've done that with the SEC as well. Luckily with the SEC, I think it's much more established, right? There's existing robo advisors that are, technically completely autonomously managing your money with software. We're taking that, a lot further in personalizing that and, providing tax optimization and all this other stuff as well. But, at least it's sort of under the same, what's known as internet advisor rules. And I trust that this will evolve over the next couple of years. And I think part of it is setting aside a budget for compliance and, making sure that we have those active conversations. I think long term, though, it creates a moat and creates a certain defensibility for the companies that choose to go into sort of the, the harder areas. But there are lots of ChatGPT wrappers or budgeting tools or online retirement calculators or portfolio trackers. But all of them hold short of the line of actually giving financial advice because it's a pain in the ass to get the regulatory approval and actually go through and be registered and have a compliance program and reviews on marketing materials and add the right disclaimers and internal checks. And it feels like every single week there's something we have to do compliance wise. I think it was worth it for us to go through that process because that line where you start giving financial advice also happens to be the line where you start giving interesting feedback and interesting insights to users. And so, if we're really going to do this properly, I think we have to be regulated and we have to like follow the rules and within that innovate as much as possible.
Do you think, because we've mentioned now medicine as an area where AI can be used and optimize things, we're obviously talking about finance, we talked about drones on Mars. Do you think there is an area that AI can't touch?
It's I think it's a great question. Honestly, the answer is no.
I thought that might be your
I
answer.
I have a hard time imagining some industry or profession or human activity that like, AI wouldn't be able to affect in some way. I mean, I think if we rewind the clock back to 10 years ago, I think everyone assumed that, blue collar work would get replaced first and robots would be everywhere and self-driving cars and drones everywhere and assistants in the kitchen or doing laundry or factories. And like in reality, it's, and then sort of very long term, humans would sort of be left doing art and the creative stuff. And it turns out that it's exactly the opposite, right?
Mhm.
Art and the creative stuff, went first. It turns out that AI was way better at, doing those things, first before that. Like, it turns out it's fairly complicated to do fine motor control, sort of it's very coordinated. I was listening to someone recently that was saying that it's possible that in 5 years all white collar work is replaced, and like robots still haven't quite caught up to sort of the AGI. So like the best use of humans, like where we might have the very last edge, is actually in like fine motor control and basically just like moving stuff around in the physical world for the AI, which like feels so dystopian, right? But the plumbers and the craftsmen and the factory workers, they may be the very last people with real jobs, as AI slowly comes for all of us.
Feels like it's coming back full circle in a way, and from history of those kind of crafts that once were way more valued, should we say, financially relative to other
Absolutely.
things that became less so, and we're kind of coming back to it. And it makes me think of that scene from iRobot. Do you remember where Will Smith's talking to Sonny, is that his name? And Sonny draws a picture with two hands and he does it in 30 seconds and it's an amazing picture. As at the same time that Will Smith's saying something like, can a robot compose a symphony? Can a robot do whatever? And the robot looks at Will Smith and says, can you? And it's such a good point, because there may well be things that specific AIs can do way better than any particular human, but put that all together and it's better than any human could do in those fields. So it'd be interesting if we just become slaves to the robots. We're physically moving things for them to complete the masterpieces and compose whatever. Oh, I've just got a note here to say I'm
Yeah,
disconnecting.
I think it's amazing that we have this extremely high bar for AI in many cases, and like in reality, I think there's this base level of intelligence is probably like as good, if not better, than the base level of intelligence for individual humans. And then I think that there's like very specific verticals and deep optimizations that you can make, on top of this base level of intelligence. And that's basically what we've done, right? We've taken a lot of, it's not just the large language models and OpenAI, right? I don't think we'd be able to like actually create advice from the chat GPTs of the world. But the idea that we have all this sort of portfolio management models and forecasting systems and efficient frontier optimizers and recommender engines mixed together with the base level of intelligence that exists now means that like we can create something pretty incredible that far exceeds the what I think of as like the regular person, right? And there's probably only a handful of experts that are better than the kinds of complex advice that's coming out of Portfolio Pilot now. And I don't know exactly where that line is, and I wouldn't be able to say exactly it's better than X% of people, but yeah, I think that's absolutely correct.
I'd like to pivot back to what you said about 30,000 users. First of all, congratulations. That's quite a milestone. From an entrepreneurial standpoint, can you talk us through how did you get there?
Yeah, I think at the end of the day, or I guess at the beginning of the day, I didn't really start this as a company. I started it as a side project for myself. And it was just sort of fun to code and hack on this thing and code in a whole bunch of rules that I was reading about. And I started talking to real experts and trying to figure out, what do people on Wall Street do and how do they manage their money and how do we think about, risk reward trade-offs. And I think after 4 or 5 months of sort of just building something for myself, I had something that was good enough to sort of run through tens of thousands of different securities and try adding something to my portfolio and think about taxes a little bit and then just sort of come up with 10 recommendations for me. And one of them would be good. But that was better than anything else I had before. And, it would take 4 hours, and we'd result with, 10 recommendations, and one would be good. And then I'd sort of tweak it a little bit, and we'd end up with 2 that are good. And so this idea that I could search through and find the optimizations was like really good for myself and helped me feel more confident. And as I was talking to other people about it and sharing it with friends and family, they said, like, I want that, that's interesting to me. And so sort of started building some features to allow people to log in and sign up. And, just, I think it sort of just like snowballed from, just me to a handful of other people. And the advice for them wasn't very good because they cared a lot about dividends and I don't care about dividends myself. And so, build some additional sort of questions and settings and, 10 people turned into 100 people. And then it felt like we were like really onto something. And then, we weren't charging for it and, it wasn't really financial advice. And, then we said, okay, if we're going to do this for real, then we have to get the regulatory approval. We have to like take a big step back. I found some like real experts to join me on this early team. We raised a little bit of venture capital money. It's sort of like this big vision of, we're going to replace human financial advisors. And we don't know exactly how we're going to get there, but, here's like what's working already. Here's the plan. Here's the path. And then, we tried many different things. I'm like, I really don't want to pour money into Google ads or Meta ads as like the way to grow. I feel like that caps out at some point. It requires absolute, massive amounts of money. And so 100 people, I think, was just very simple. Just talk to as many people as possible, right? Like the first 100 people that signed up and like used the product, I probably spoke to every single one of them and just like asked them questions about what they would use and tried to figure out, what's actually going on in their financial lives. And I don't think you can do the first 100 with like any sort of scale, and like doing it at scale means that you lose out on lots of potential feedback. And, we were giving early financial advice to people and recommendations to sell stuff. And they would say like, no, that's terrible advice. Objectively good advice, subjectively bad advice. And like, we didn't consider this specific, nuance in their thinking, or, it didn't feel like we gave people an option, or we gave people too many options, or we didn't consider the taxes or their long-term financial plan, or the fact that they're married, or that we didn't import this other account. Or, I mean, there's so many different factors like go into giving good financial advice. I think going from 100 to 1,000, we started needing to experiment with YouTube videos, a little bit of social media. A lot of it was sort of just building in public and just sharing the kinds of things that we were working on, and added this new thing, and here's a product launch. And I think people put a lot of focus on, the one big launch. And in reality, I think we've just done like 20 small launches over the last couple of years. And like every couple months, it feels like we're announcing some new big thing. And, people like that. And that's great on LinkedIn and Facebook and Twitter. And, more people see that and come check it out. Then I think there's, going from 1,000 to like tens of thousands, then you need something that works at scale, right? And so that's been a lot of our focus over the last year and a half. And what we found is really effective is partnerships. And so we'll actually partner with some other company and do some joint feature integration or cross marketing, and we're not really competing with other software companies, right? We're like, there's a lot of companies that are offering opportunities, of different things you can invest in, or more research, more data. And then there's a lot of brokerages and execution platforms. And so basically it feels like we have this natural partner with the people creating the opportunities and the execution platforms themselves, because we're sort of this decision-making layer in the middle of it all. And so I actually think that like it's these partnerships in particular that are like really, really going to help us grow. And then recently we've been thinking a lot about like, there's something about news and earned media and insights, and the system itself can explain a lot about what's going on in the world and can contextualize that. And so can we use that for SEO and organic search? And it kind of feels like we need to basically become a media company. And that was kind of a crazy thought a year ago. And then we searched for that. And so actually recently we bought this media brand, diversification.com. And we're working with this guy who's built multiple media companies in the financial space to basically scale up diversification.com to tens of thousands of articles and tools, and sort of the very big programmatic SEO push. And so our goal is 100,000 plus monthly unique visitors by the end of the year, just through diversification.com. And I think actually owning some media and having a big part of that powered by this economic insights engine that we've set up, will let us scale to the next level. And that's probably how we get to 100,000 users and hundreds of thousands of users.
So you have said most startups don't fail because of the product, but because the founders stop. How have you personally kept going when things get tough or when you plateau?
Yeah, and I like that in general, right? Like, I mean, at the end of the day, I think that lots of people have many, many different excuses about like why the company ultimately fails. And like co-founder breakups and fights are common, or people talk about running out of money, or like they didn't find the right market, or no one wanted to buy the thing, or there was some tech challenge. And not everyone like has the privilege to just keep going, especially when you run out of money, right? It's hard to just keep going. But I think truly the startup dies once you give up on it. And so I don't know, I feel like part of it is sort of this like very core conviction that this thing needs to exist. And then I think there's like this core resilience, that's needed to be an entrepreneur that, I honestly think not everyone has. It's really nice in the ups, but, I kind of feel like my week is, 4 downs and 3 ups, every single week. And it just sort of feels like, 2 steps forward and 1 step back. And my mood on a given day is like very tied to what I see on our Stripe account. Is our revenue up or down, and what's our churn level at any given moment? But the highs are high, and I think that like that is a big deal. I think the other big motivation I think that like really keeps me going is that we've built this feedback machine. And so I think there's probably 8 or 9 different channels in which we can get feedback from users. And one of those channels is that like I actually just get on lots of calls with users. And so probably 2 to, even though we have 30,000 users, every single day I'm getting on calls with probably 2 to 4 users. And they're typically 2 different kinds of calls. There's onboarding calls where we sort of randomly give new users in the system, like we randomly because I don't think we can do it with everybody. We randomly tell people like, hey, you can get on an onboarding call to like help get set up and sort of help you get started. And they can just book, just directly in my calendar with a Calendly link. So I just have random people signing up on my calendar sort of just throughout the week. And then also if people downgrade from a subscription, we randomly send some of those people a message saying like, hey, would you get on a call with one of our co-founders, just to share some feedback. And so it kind of feels like half of those calls are really optimistic. I just found this, I'm exploring it, or like trying to get the most out of it. And the other calls are like, I didn't like X about the product. And, but in both cases, they're real people that are, that are interested enough to give their time to something that we built. There's a real challenge that they're trying to solve. I can like almost in every single case imagine like, okay, if we change this thing about the product, then it could actually save them $100, $1,000, $10,000 in some cases. They're clearly reaching out because they're not as confident about their situation. The idea that we can help people. And the difference between where we're at right now and, 1 million users is probably just 1,000 small tweaks. And so the idea that like, we're just making one tweak or a handful of tweaks every single day, like over the course of the next couple of years, like we're really tightening this product and, making it truly scalable. I think that's a huge part of what keeps me going as well. And then, can we fundraise? What's our cash flow? Do we have the right people? It kind of feels like details along the way. And, everything else, the compliance stuff and accounting and branding, and have we set up the right channels, and are we converting people at the right amount? And, it's all just feels like stuff that's part of the machine that we need to figure out along the way. And like, I trust that sort of no matter what happens over the next couple of years, we're solving this like very core problem, and, we'll get there. And, every single week is just like, okay, a little bit more, a little bit more.
It's such an interesting thing, that resilience part of pushing through when you might have more negative calls than positive, or when the Stripe account isn't showing what you want it to show, and keeping on going. That I agree. I think it exists in such a small percentage of people.
For folks listening that either want to get into entrepreneurship or already have a business, sometimes I dare to say, oftentimes the goal is to sell that business. Not always. And you actually did that. And that is, as I learned more about that whole process, is a process. It's not something that's just like automatic. It's a whole thing. Could you maybe just mention like, how was that experience for you at a high level? Were you surprised? Did you kind of know what you were getting into? And then what kind of partnerships or tips did you take away that maybe could help other people entering into that moment?
I think the core, like one of the things that really stuck with me through this process and talking to other people that went through this process as well, is that great businesses are bought, not sold. And so I think that's really, really important in that, like, if you go out, if you try to build a company with the goal of selling it, if you try to sell a business, you're going to end up getting way less for it than if, you build something amazing, something competitive, something that's differentiated, something that's growing very quickly, where some larger business or fund says, we have to have that.
Mm-hmm.
Let's go and acquire that company. And so we never, obviously we were open to acquisition offers along the way, right? It feels crazy. There's always a price. But we didn't start Iris Automation to say like, okay, we're going to solve this problem, make this amount of money, and then we're going to sell it to the highest bidder. Instead, we said, here's this absolutely massive opportunity. There's this bottleneck for autonomous vehicles and collision avoidance systems, and no one else is solving it. We have this unique edge. And we're crazy enough to actually just go for it. And we raised venture capital money and hired the right team. And we were growing at the fastest growth rate we ever grew in the history of the company at 7 years in. And we had just gotten all of our regulatory approvals and things were really working. And like, that's when a big partner of ours, tapped us on the shoulder and said like, hey, here's an offer. We have this private equity firm that we're working with, and we can basically do this like leverage buyout, which triggered a whole bunch of board conversations to say like, okay, let's take the offer. So it feels like, it's the right time.
Nice.
I think that there's natural partnerships in the business as emerge. I think it's reasonable to have sort of open conversations and relationships with companies that can buy you, but not really in the vein of like, hey, let's keep the conversation open for potential acquisition. I think it's better to say like, you should be a distribution partner for us, right? Or the two of us together can create this package or offering that is way better than before. I personally would love to work with Fidelity and Robinhood and Schwab and Wells Fargo and major credit unions and FactSet and big institutions, because those seem like massive revenue opportunities for us, and they have millions of users, that should be Portfolio Pilot users. And yes, in the back of my mind, they're all potential acquirers, but I think it's much less productive if you go into those conversations, talking about acquisition or trying to sell the company. It's much better to, show value through a partnership and then just keep innovating and keep growing. Like there's this crazy opportunity you have as a relatively small company to just move so much faster that, in most cases outweighs the potential negatives of, working with a big company like this. And I think a lot of people are a little bit paralyzed about, what if Google does the same thing we're doing, or what if OpenAI kills this part of our business? Or I don't think most people should be worried about that.
You're an electron, not a molecule.
Exactly.
We were talking to you. Becky's background is in sales. She's a whiz sales coach. And there's this concept that, I don't know if she coined it, but it's called like the pendulum, which you can imagine, which is like, no, Alex, I don't think this is for you. And you're like, wait, let me see it. Like, then you're interested. But if I'm like, hey, Alex, want to see these watches or whatever, you're like, I'm good. So it's of course.
Yeah, there's many conversations that we have with people where like most of our the onboarding calls, the feedback calls, right? Like the most, like in hindsight, the most productive, the most productive conversations end up being the ones where I learn a tremendous amount, right? And the longer my notes are about stuff to improve, the more likely it is that those people say like, wow, this guy is like really trying to learn, what would make a good product for me. Maybe I should give this another try.
Yeah.
Maybe, like, this is really interesting. Let me dive into this. And so I oftentimes tell these people like, okay, technically this is an onboarding call, and I want to help you get set up, but it's 50% for me too, right? Like, just to be super clear, like, I want to learn. This is incredibly valuable for me. And I think people really appreciate that honesty and say like, wow, it's kind of amazing that I'm talking to the co-founder of this company. And like, I kind of feel like I can directly influence the product roadmap here. Let me actually just be brutally honest about what's working, what's not working, and like, what would be the key thing missing for me.
I think
I have such a hard time imagining that, some big company is doing that. The VP of product, Google is sitting down with like individual users and, doing that.
It's a function of the size. I mean, they can deploy more resources perhaps, but they don't have as much granular attention. And I think the kind of undercurrent that I saw there in your response or your comment is authenticity. I think if you're authentic, people show up because it's a win-win. There's growth in it for both of us. If you're coming into an exchange authentically, rejection is just as valuable as affirmation. If in some cases more valuable. So and I think as a founder, when you're doing sales yourself, you at some point you start to realize that, and it becomes less scary to get that rejection. You're like, oh, I can't wait! Like I get like the actual calories of this call. And true entrepreneurship is essentially trying to solve a problem, trying to create something that hasn't been done before, like getting us safely to another planet, or extending our like quality of life or something like that. And true sales is trying to align incentives. Like you need someone to do your taxes. You don't like it. You don't want to do it. There's costs of doing it incorrectly. I can do that. And you kind of find the balance between what is the opportunity cost for you and what it is I can provide. And maybe it's like, please take my money. There's been situations I'm sure you can attest to where you're like, please come out with this product. Like I'm ready. And so those are the moments I think ideally we should be aiming for in sales. I'd say like the emotions or the feelings or data. So if there's discomfort, it's worth exploring. Is the discomfort just because there's like healthy discomfort, like before a race, what's it called, that like eustress instead of distress. And so I think it's just data. But I did want to, before we end, I have to ask you, because it's not every day I talk to someone who's worked on drones for space. I'm fascinated by space more and more. And it's a real mystery to me how something so vast takes up so little of our time, and how we could be aware of something so vast and not really be able to reach it. But you at least have worked on getting to our nearest planet, or one of them. I guess Venus is technically closer. But Mars has like a third of the atmosphere of Earth, or I believe. So how do you make a flying drone? Does a rotor have to spin like 3 times faster? Is it 9 times faster? Can you walk us through like how you develop a drone for that type of environment?
Yeah. So I think the atmosphere is something like 10% as thick as the Earth, but the gravity is like a third, something like that.
Okay.
And so you get a little bit of assist by the fact that the gravity is less. Um, so I think there was a few problems very early on. This is sort of like early 2010s. There was this idea that like drones are becoming better and better, more reliable, and if we're sending like the Mars rover anyway, we're spending billions of dollars. What if we spend tens of millions on this little drone and basically like let it pop off the main rover and sort of go and explore? And like the very first one will be an experimentation platform. We'll figure out how to fly and navigate and survive. And then, the next ones, like we can actually go way further and explore way more if we have a few of these drones, flying across the Martian surface, because we're still really slow, with one rover and one location. It moves extremely slowly, right? Sort of 5 meters at a time. And, it's there for years. And so we end up covering tens of miles, but what's tens of miles on an entire planet? And so I think there was a few major challenges very early on. And I didn't work on all the challenges, right? But one of the challenges was this. I think the one that people go to like immediately is atmosphere is so much less, how do you deal with that? Honestly, like even just on the Earth, the drones and the torque and the speed at which the blades turn is a very little limiting factor, right? There's if we talk about real airplanes, like some stunt planes will be able to what's known as like hanging from the prop, basically like completely vertical. There's enough thrust going from the propeller that they can literally just hang there straight. And it basically just it's all about the thrust to weight ratio. And like as long as that's like more than 1, then like you can do sort of crazy acrobatics like that. With drones, like the thrust to weight ratio is like 10 to 1, 100 to 1, like it's so much more higher powered already for like the little small toy drones, little photography drones, that that ended up not being an issue at all. And so even in like a very thin atmosphere, you just spin the blades 10 times faster, and like you end up creating the same kind of lift, and like you just like have a higher powered like thrust to weight ratio.
Yeah.
The two like real important, like the two really hard things were like power and like sort of power and durability, right? Like how do you keep this thing going through dust storms? How do you keep it powered? You sort of have to anchor it to the surface and not get it like off track.
Mm.
And then the other thing was navigation. And so the like sort of the power and solar cells like got figured out by some other team. And I think that's like early on, sort of 2012, 2013, 2014. I think it was hard to imagine how we would actually solve that. But there's sort of like solar panels are getting better and better and better. We're working on that already for the rest of the rover. That like, by 2019, we'll have good enough solar panels to like put it on the little drone itself and like deal with that. And then navigation was actually the really difficult challenge, because we don't have a GPS system around Mars. And so you like need to figure out a way to localize completely independently from the rover. And so what can you use to be able to figure out your position
Star
relative
charts.
to the ground? And that ended up being like all the computer vision work that we worked on and our team worked on, to be able to do tracking along the ground, to be able to localize. And you basically are like looking at different sized rocks on the ground, and you can tell your height and position from sort of this like mapping along the ground. And then you need it to be really, really robust and have all the processing happen on board. As you can imagine, there's a lot of parallels between like that kind of computer vision work there and what I eventually ended up working on with Iris Automation and like computer vision for commercial drones, collision avoidance systems.
So I wanted to actually just pick up on so selling a company, and from what I picked up before, it was about building a company that's worth selling. We talked about the resilience piece of pushing through that. It's something I've asked a few people recently, because I think there is a balance between flogging a dead horse, if you know that phrase, versus resilience and pushing through to be able to build something that's worth selling. Where would you say or what were the clues maybe that this is worth keeping on?
Yeah, it's an interesting question, right? Because you could absolutely just keep going after something that is adding very little value that no one will ever pay for. Uh, there must be like lots and lots and lots of companies that you just look at them or like, I don't understand why this is getting funding or why someone is spending time building this. It just feels like it's never going to work, or it's just like feels like something so niche that no one ever will buy it. I think at the end of the day, it comes down to feedback from customers, and there's no better feedback than someone whipping out their credit card and giving you money. And so I think you have to constantly ask yourself and ask other people, are they willing to pay for this? And I think it's easy for people to say like, well, they're not willing to pay for it right now, but if I just add this one feature, then maybe they'll pay for it. Or, it's like, I got to figure out these things, or I got to spend 2 years in R&D. And I think if there's something valuable there, you can probably narrow down the focus to the thing that people will actually pay for today. Even if it's a service that you offer in the beginning. Even if it's only 10% automated at the beginning and you have a path to 95% automated, I think that's worthwhile for people too. Just like in the first couple of years, making money, learning more about the problem. There's a lot of sort of services or sort of, human augmented software companies that, get real demand and, are basically forced to automate stuff and build out the tech stack because they have to, because they just can't handle the traffic anymore. And in many ways, like even just having a landing page with some idea and people coming to you saying like, I want that thing, why don't you have a login button or a sign up button? And how much does it cost? I don't see a pricing tab there. That can be useful as well, just to validate ideas. Kind of like we talked about before, right? The first 100 people aren't going to come from ads or brand building or someone just discovering you on the internet. They're going to come from friends, or you reaching out to people, or just attending events. And there's more than enough ways that you can just talk to people and ask them to buy this thing. And I think it's also very simple for people to tell you, Becky, that sounds awesome. You should definitely build that. I'd probably buy that. There's a big difference between that and people actually buying it.
Mm-hmm.
And so like having the outline of something, or building the bare minimum thing that someone will actually buy is like usually the best sign. And then I think people get stuck as well in like, oh, I have my first 100 customers. I have no way, I have no idea how I'm going to scale this up to 1 million. And, it kind of feels like they need to build all kinds of things to, do organic SEO and brand building and the best website in the world. Or, they're worried like, okay, if we're at 1 million, then we're going to get, we need to file patents now to be able to protect against something later. I think most of that doesn't really matter. Like if you're at 100 customers, like the main focus should just be, how do I get to 150 customers?
Mm-hmm.
And like getting 50 more customers is probably mostly manual too. And like ask your current users to refer you to friends, or just reach out to people on LinkedIn. Or, I mean, it depends what kind of business you're building, but adding an additional 50 customers to your 100 doesn't feel that hard.
Mm-hmm.
And then you're at 150,
kind of like,
and how do you get to 200? And
mm-hmm.
it just, in many ways, it's sort of just like, how do I get more paying customers? And like, if you have 50 customers and they all say like, oh, it's just too slow to use the product, like it's really cool and I would probably, I'd pay for it. Like, can you get them to prepay for the product, and just give them a trial, or like get them to pay for it as soon as you hit some milestone? With the previous company, we had to spend a lot of time actually building the tech, getting the regulatory approval. And so we signed hundreds of contracts with a clause in there that we would finish the tech and get the regulatory approval. And it wasn't real money, but it was it was in our control to get that, to unlock that money. And through those conversations, people said, well, okay, sure, I want you to finish the tech and get the regulatory approval. That's the most important thing. But I'm like, I don't know if I can pay this much for it. Or there's a third thing that you haven't solved yet, which is like, how do you actually integrate it into this drone? Or, does it work in my specific environment? Or, like it was very obvious that people wanted the thing we were selling, but then as soon as we got them to try to sign on the dotted line, then all the other objections came out, where size, weight, and power mattered a lot, right? It couldn't take more than a certain amount of energy, or they weren't technically the ones building the drone. They were buying it from a third-party supplier. And so we actually needed to be working with the third-party supplier to do the integration, and make that really easy. And so we ended up forming all these partnerships with the suppliers rather than the end users that were ultimately paying for it. And so there's sort of like all these extra things to figure out. And it was clear that like we had the main challenge ahead of it. It's just like build the tech and the regulations. But then on the way, we needed to sort out sort of all the other objections. Otherwise, we would have got to, year 4 in the company, build the tech, get the regulatory approval, and then figure out all the other stuff that actually stop people from buying as well.
Mm-hmm.
As soon as you ask someone to pay for it, then like you get the real objections.
Mm-hmm. And it's taking it, like you said, from 100 customers to 150. It's a step at a time. It's
exactly
exploring Mars 10 miles at a time, right? Not the whole thing all at once.
Yeah, let's just get it into the air,
Mm-hmm.
once, right? In this like 10% atmosphere.
Mm-hmm.
Let's just, navigate, 10 meters in this indoor environment here in a lab in Pasadena, like that felt like an absolutely massive achievement, and it was just like one step at a time. Yeah.
If you had unlimited resources and time, what's the next moonshot you build?
I think I'm still really fascinated with robotics, and like kind of like we were talking about before, it feels like one of the very last things that will be solved with AI will be sort of like real world manipulation and fine motor control. And like it kind of feels like, replacing those tasks, even something like folding laundry or going on an errand, like truly autonomously. It feels like you need the real world understanding and the AGI, from sort of the large language models, and you need the sort of like the mechanical fine motor control, and you need to have this like spatial awareness and navigation, and you need to react in real time, and it needs to be self-sustaining and not like plugged into something with a power source. And you need to think about all these like social cues and how do you interact with the real world that's built for humans. I think there's something like really fascinating there as well. Probably something like that. I mean, you need hundreds of millions of dollars to like build something like that, right? And so it's also very difficult to get into that game for most people. And so you don't have that much competition, and it's like true like problem for humanity, creates a real output. There's a lot of stories and articles I've read over the last year or two, but like, over the next couple of years, as we get closer to super intelligence, what are going to be the real bottlenecks? And a lot of it is just physical infrastructure. At a certain point, we tap out on all energy production in the US, right? Like in 2027, like not that far away. If we keep growing at the scale, and if these models, require more and more compute, how do we build more factories? How do we become like more self-reliant? How do we increasing real GDP? It's really easy in the software world to be like, well, if we can, help people save more money, that's going to have an impact on GDP. But I don't know exactly the breakdown, right? Like 20% is just hospitals, of the economy, right? Like, I think something like 1 of every 20 people is a truck driver. There are just factories, and there's farmland, and like there's just sort of real parts of the economy that, like, if you're going to double GDP, for example, that's the stuff that you need to affect. And like in the software world, it almost feels like we're like playing on the margins, of sort of real industry in America or the world.
Where can people follow what you're doing or get in touch with you?
Ultimately, I would love for people to sign up for Portfolio Pilot, of course. Portfoliopilot.com. It's free to get going. We give a free assessment. There's a 2-week free trial. And then feel honestly, we are looking for as much feedback as possible. Just email me at alex@portfoliopilot.com.
Wonderful.
And, maybe that's wild, but like I said, we need all the small little tweaks and improvements. And if something is not working, or it's just like not quite the right thing, then let me know. I'll pass it on to the right person in the company to get fixed as soon as possible.
Thank you for talking with us today. It's a fascinating conversation. Could easily go on for another hour or two, but I'll let you get back to getting those 100,000 users.
I love it. Becky, David, thanks for having me on.
Thanks,
Pleasure.
Alex.